Hey guys, welcome to Individual Investor. A lot of the financial ratios that we have covered so far require an understanding of the liabilities and debt. It is important that you're able to quickly look at a balance sheet and determine if there are any red flags with the financial health of a company. In this video, we're going to do a deep dive on liabilities, debt, and show you how to interpret this on the balance sheet. So what is a liability? The simplest definition is that a liability is something that you owe or an obligation to someone else or another party. This concept applies to individuals, people, households, and companies or businesses. For example, if you take out a personal loan, that's a liability. The mortgage or rent on your house or apartment, that's also a liability. If someone has paid you in advance for services that you have not delivered yet, that's also considered a liability. Now, debt is actually a form of liability, and in accounting terms, it is defined as a financial obligation or money owed to someone else. For purposes of stock analysis in the corporate world, some forms of corporate debt are business loans, notes payable, and also bonds. And in more recent years, there was an update to the accounting standards where operating leases have to be also considered as part of a balance sheet liability, and therefore they are considered a form of debt as well. When analyzing a company's balance sheet, you will notice that there are two types of liabilities: current liabilities and non-current liabilities. Current liabilities are obligations that are due within the first 12 months, whereas non-current liabilities are due after 12 months or a year. It is very important to always look at the short-term and the long-term financial obligations, because if you're investing in a company, you want to make sure that the company is in a strong financial position from a liquidity and from a solvency point of view. A company is said to have good liquidity if it can meet or clear its short-term or current liabilities. A financial ratio that you can use to test for liquidity is the current ratio. On the other hand, a business that is solvent or that has good solvency means that it can meet its long-term or non-current liabilities. One financial ratio that you can use to test for solvency is the debt to equity ratio. Another ratio that helps is the debt to EBITDA ratio that helps you determine if the company can pay its long-term financial obligations given the earnings that it generates. All the liabilities and debt figures are already highlighted for you on financial websites like Morningstar, Zacks, or Yahoo Finance. However, let's take a look at some balance sheets to really make sure we understand where to find the liabilities and how to calculate the debt. But first, if you are enjoying this video, I would really appreciate if you can please hit the like button and subscribe to my channel. Thank you for your support. Let's move on. All right, let's take a look at three companies in different sectors. So I have here Meta Platforms, then we're gonna take a look at Coca Cola, and then finally we're gonna also take a look at Berkshire Hathaway. So, like I said before, all these figures are already highlighted for you on any financial website. So here we have Yahoo Finance, and if we go to balance sheet for Meta, then here we have all the figures extracted from the real balance sheet. So if we go to the total liabilities, we can see here that they break them down current and total non-current liabilities. And there's also a separate line item here for the debt. So total debt, $13.873 billion. Now, if we go to the balance sheet and if we look at the year 2021, right, we have the assets and here we have the liabilities. And like I said before, here you have the total liabilities, $41.1 billion, which is exactly the same number that we have here on Yahoo Finance. Here we have the current liabilities, all this stuff over here, right? And here we have basically all the things that Meta owes to someone else. So things like accounts payable, partners payable. These are basically invoices that haven't been paid yet. and we have some operating leases, current ones. We have some expenses and deferred revenue, so revenue that they have not recognized yet. Okay. Under other liabilities, they basically have just $7 billion. Okay, they don't have much. We see that there is no actually debt here, which is something really interesting. There is no debt or long-term debt on the liabilities. However, if we go to Yahoo Finance, we'll see that there is actually a total debt of $13.873 billion. Now, why is that? Well, like I said before, operating leases are considered a form of debt. So we have basically $1.1 billion here, and then we have $12.7 billion. So if we were to add those up, 1127 plus 12,746, so we get a total of 13.873, which is exactly what we have here on Yahoo Finance. Okay, so despite Facebook not having any long-term debt or notes payable or bonds, etc., all those operating leases are considered debt. If we do the same for Coca Cola, so if we go to the Coca Cola balance sheet here on their 2021, we can go to the liabilities and see that we have a total current liabilities of almost $20 billion, and then they have some long-term debt, some other non-current liabilities, and then some deferred income tax liabilities. So if we were to add everything up here, we have a total of 69,494. All right, and if we go here, we can see that, let me just bring the calculator back up. We see that that's the total liabilities. Okay, $69 billion. Now there is some total debt and some net debt as well. We can see that Coca Cola actually specifies or has some long-term debt here. Okay, and that's 38.116. They also have some loans and notes payable. Okay, so that's another form of debt, 3.3 billion. Some maturities of long-term debt. This means basically some long-term debt, or could be bonds, and they have to pay the coupon on those bonds, or maybe the principal back to the bondholder. So they probably have a bunch of these. So a lot of them are maturing within 12 months. So that's what we have here. Another $1.3 billion. And I think that's it. So if we were to add these three figures, let's see what we get. So we have 3307, the notes payable. Then we have the current maturities of long-term debt, 338, and then we add the long-term debt, $38.116 billion, and we get 42.761. Is that what we have here? Yes. So we can see here that we get exactly the same figure reported by Yahoo Finance, $42.761 billion. And here we have the net debt, which actually is just the debt that we just calculated, or total debt, minus any cash and cash equivalents, because technically that cash is money that is available, so we could use it to pay or reduce the debt. If we go back to the balance sheet and we scroll up to the assets, we see here that we have some cash and cash equivalents, and that's roughly 10 billion worth of cash and cash equivalents. So if we take the debt, the total debt again, let's see, $42761 billion, and then subtract here the the cash and cash equivalents, 9684, we get 33,077, so $33 billion. And we can see here that that's exactly the same number. So the net debt for Coca-Cola, again, total debt minus cash and cash equivalents, is $33.077 billion. And finally, let's take a look now at a slightly different type of company, Berkshire Hathaway. As you can see here, we have here the total debt as well, like with Coca-Cola, and we also have some net debt as well. So let's look now at the balance sheet. And Berkshire Hathaway is as we know, a financial company, so they report the balance sheet slightly different. So they break it down by their businesses. On the liabilities, they have the insurance business unit, and they also have the railroad, utilities, and energy as another bucket. And they have, and yeah, that's it pretty much. For the insurance, we see that they have here liabilities, and we have a bunch of things here. So we have some losses and adjustments, some health insurance benefits, unearned premiums, money owed to third-party accounts, and they also have here what we care about in terms of debt will be the notes payable and other borrowings. Okay, we're gonna need this figure later. And then on the railroad, we have a similar breakdown, and we have here the notes payable, so basically short-term debt instruments, 74, almost $80 billion, and that's pretty much it. Okay, so let's see, if we were to add, let's first add the liabilities to make sure that the numbers match. So if we add the liabilities from both insurance and railroad, utilities, and energy, we have 255,711. The total liabilities, $443 billion. Okay, and if we go to Yahoo Finance, we'll see that that effectively those are the total liabilities. All right, and then finally, to compute the debt, pretty much similar to what we did for Coca-Cola. Okay, to compute the debt, we only need the figures highlighted in red here, so 39,272 plus 74,990, and we have $114 billion. And then the net debt will be the total debt minus the cash and cash equivalents. So if we go back to the balance sheet here, let's scroll up to the assets, and all we need to do here is now find the cash and cash equivalents, which are $83 billion over here, and then on their railroad, utilities, and energy, we have an extra almost $3 billion. And if we take now this is the total debt, and we subtract a 5,319, so the cash from the insurance and also the cash from railroads, utilities, and energy. Okay, we get 26,078. So if we go back to Yahoo Finance, we'll see that effectively we get exactly the same net debt. And with that, I would like to thank you guys for joining me today. I hope you enjoyed the video, and I look forward to seeing you next time. Take care.